Welcome to another video. Today I will be sharing with you a very important multi-time frame analysis. So we will be taking a pair, making a multi-time frame analysis on it, checking their order flow. So what big banks and institutions are doing on the pair. So COT data, I don't know if you already know what that is. And anyway, I will be sharing with you a very important set of topics that you have to know when you are developing a strategy or when you are trading the market. Now, if you're new to the channel, I'm a top author on the TradingView platform and I share free education and analysis each and every day on all of those platforms, and I suggest that you subscribe so that you can take advantage of all this free education. Okay, so today I want to be making a full analysis on NAS100. So we will be making the analysis from a technical perspective, then we will be checking the order flow. So what hedge funds are doing on pairs that are correlating with NAS100, and we will see what kind of opportunities there are to be capitalizing on it. So let's start the analysis. First of all, let's check what we have from a weekly perspective on it. So on the weekly time frame, what we can clearly see is that the market has, after this nice impulse to the downside, started this retracement that turned out to be a 100% retracement all the way back up almost to the previous high. In fact, if we take our Fibonacci on the supposed impulse to the downside, so from the high to the low of this impulse, what we can clearly see is that the market broke above the 0.786 Fibonacci retracement with this green candle, retested it, closed above, and continued to the upside. Now, if you see this happening, what does it mean? It means that the market has failed to continue lower and basically has failed to complete which pattern? It has failed to complete the impulse correction and impulse pattern to the downside. So you don't want to see after an impulse the market retrace more than 0.786 of the original impulse to the downside. That is something that you don't want to see if you're looking for an impulse correction and impulse pattern to the downside. So in a trending market, you have to make sure that these retracements are never above the 0.786, or you can definitely expect a trend reversal and the possibility to create an inverted head and shoulders. So in this kind of situation, what do we have? We know that the market has reached the previous high. Now, usually what happens in these situations is that the market either goes for a quick grab of liquidity just above the previous high and then starts a nice move to the downside and then continuation to the upside. That is what happens most of the times. But first of all, it's clear that we want to see the market melt a little bit to the downside, go for a fetch of some new liquidity at a lower price. Now, NAS100, for example, correlates pretty well with what we have on Euro AUD. They have around minus 94% correlation. So if we want information on what we can expect next on NAS100, we can go and see what we have from a COT perspective. So commitment of traders, what hedge funds are doing in the market on, for example, the AUD, which can help us understand what we can expect next for it by seeing how hedge funds are positioned in the market. Most importantly, non-commercials. All the data is from non-commercials. Why the non-commercials? Because they are the biggest speculators in the market. So if you want to be following the big boys, it's definitely always a good idea to look at what is their positioning in the market. Just a quick reminder, make sure you comment below and you let me know which pairs or topics you would like me to analyze or cover in the next videos. And what we can see that we went from having minus 54k net positions all the way up to having minus 25k net positions, and currently we're sitting at minus 39k net positions. But there's one very important thing that we have to keep in mind. Lately on Euro AUD, what we have what we have at the moment lately on Euro AUD is a market that has been moving to the downside, meaning that AUD has been getting stronger. And if during a move to the upside on the AUD, because if Euro AUD is moving to the downside, it means that AUD is getting stronger. And if during a move to the upside, hedge funds start to open more shorts, so 5.7k shorts with the last report and 2.1k shorts with the previous report. So during a move to the upside, opening shorts, what we can expect? We can expect AUD to start getting weaker and Euro AUD make a move to the upside and NAS make a move to the downside. So everything is starting to come into place. We know what we want to be looking at from a directional perspective. We want to see AUD start getting weaker. We are currently sitting in minus 39k net position, so with a 48.8% short exposure from an institutional perspective on it, and a 19.1% long exposure with a lot of shorts added and 64k shorts on it. So we want to see the market make a move lower on NAS and obviously also on AUD because they correlate pretty well. We go and see what we have from a daily perspective. On the weekly, we completed our analysis. Let's go and see what we have on the daily. Now, on the daily time frame, we have a market that has continuously created higher highs and higher lows, breaking all structure to the upside, exactly as AUD has been doing lately. And with what is the last structure that the market has created? The last structure that the market has is this one here, this previous resistance. Again, resistance here, the market broke it to the upside, turned support here, again supported this area, and until the market will be above this previous resistance that is now turned support, we can't be looking for any shorting opportunities because obviously it would be too risky because you would be shorting at a daily support area, which is never a good idea. So the way in which we will be approaching this with students is, as usual, being reactive and not predictive. Trading is reactive. You have to react to the rules of your strategy. So take the direction according to your rules, and you need to have clear set of rules for entry, stop, take profit, because otherwise you will be acting on emotions, which is not something that you want to be doing when you're trading. You want to have a clear set of rules that you can print and you will be following because you know that those rules in the long term will always make you money because they have been both back tested and live tested and proven profitable. That is where you have to aim with your trading. If you're always taking discretionary decisions, you will never be consistent because you don't have a clear edge in the market over your competitors. So the way in which we will be approaching this is very simple. We know that we have previous support here, and we know that there is a very basic concept in the market. Previous support, if it is broken, it's turned resistance. So if the market will manage to make a strong impulse to the downside and break below this structure, then what will happen? This structure support will be turned structure resistance. And after the break of this area, what you also expect is for the market to go for a retest of the broken support now turned resistance to grab some liquidity. And after the break, on the retest of this area, that is where you will have the best probabilities and best risk to reward for a possible opportunity. And as you know, trading is all about probabilities and risk to reward. So after the break to the downside, on the retest, we will have the confluence of the previous support that will be then turned resistance. We will have the confluence of the Fibonacci taken from the high to the low of the impulse. It would be great to see at 0.618 Fibonacci confluence, so the golden ratio providing even more resistance at this area, and that is where we will be monitoring price action with students. So exactly inside of this area, we will drop down on the 4-hour time frame, because always remember, monthly, weekly, and daily are for direction. The best time frame for entry is the 4 hours. So we will be dropping with students on the 4-hour time frame, and as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities for the move to the downside to happen. So as usual, being reactive and not predictive. If the market from here will go higher, Then again, we will simply be shifting this structure higher, and when the market will break the new structure, then we will be looking for a potential opportunity, but never until the structure of the market from a daily perspective is bullish, because now the market can easily continue to the upside because we have clear support here. So this is how we will be approaching NAS100 and how I suggest that you do it as well if it's satisfying the rules of your own strategy. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis that I share on all these platforms. And also make sure you go and check out the mentorship program. You find the link in the description. It's a very complete program. You first learn all the rules of my strategies and then you trade them live with me. Each and every day I give you a new daily market breakdown showing you exactly how to apply the strategies with entry, stops, and take profit. And I also answer any question that you have each and every day. So it's a very valuable program and very complete. And I suggest you go and check it out, or I will see you in the next video.